All right, DeFi enthusiasts, welcome back for another deep dive into the latest cutting-edge DeFi research.
Excited to be back.
Today we're tackling automated market making, the case of pegged assets. This paper, let me tell you, it really gets into the nitty-gritty
Oh, it does.
of how AMMs should be handling pegged assets.
Yeah, and we often think of these pegged assets like stablecoins or liquid staking tokens as being, relatively stable.
You'd think so, right?
You'd think, right. But they can actually experience some pretty wild price swings.
Oh, tell me about it. I mean, remember what happened with the USDC after Silicon Valley Bank went kaput?
Exactly. And that's exactly why this research is so important,
Yeah.
because it challenges those old school assumptions
Right.
about how AMMs should handle these, well, supposedly stable assets.
So basically what you're saying is traditional AMMs, they don't always play nice with these pegged assets.
Well, yeah, that's one way to put it.
All right, so spill the beans. What's the problem here?
Well, traditional AMMs, they often rely on this idea of mean reversion,
Okay.
which is basically, the idea that prices will eventually go back to their peg, right?
Right, like a rubber band snapping back.
Exactly. But what if the peg itself is actually moving?
Hold on. A moving peg.
Huh?
That sounds like trying to hit a target that's doing the cha-cha slide.
Haha, yeah. That's a great analogy.
Right.
And that's exactly what these researchers are dealing with in this paper.
Yeah.
They're basically saying that pegged assets, they're not as simple as we thought.
Right.
And they're introducing this concept called a multi-level nested Ornstein-Uhlenbeck process.
Okay, I'm going to be honest with you. I think I got lost somewhere between multi-level and process.
All right, fair enough. It's a bit of a mouthful.
Yeah, can we maybe, I don't know, break this down a little?
Sure.
Maybe in a way that, like, even my grandma could understand it.
Oh, okay. Imagine a boat trying to reach a buoy out in the ocean, right?
Yeah, I'm with you.
Now, the boat, that's the price of our pegged asset. And the buoy, that's the peg it's trying to stay attached to.
Right.
But here's the kicker. Imagine that buoy is also drifting around because of the currents and the waves.
Oh, so it's not just about the boat reaching the buoy.
Right.
The buoy's playing hide and seek, too.
Exactly. So it's not just a simple snapback situation like with a rubber band.
No wonder those traditional AMMs get thrown off. They're expecting a nice stationary target, but it's more like trying to pin down a slippery fish.
Haha, exactly. So we need to start thinking about pegged assets not as simple rubber bands,
Yeah.
but as boats navigating a constantly shifting ocean.
Okay, so how do we build a better AMM, one that can actually handle these, more complex pegged assets? What's the secret sauce here?
Well, these researchers, they came up with a pretty clever filtering technique to try and figure out where that hidden moving target, that buoy, is actually going.
So that's like detective work.
Exactly. They're using price data to, kind of piece together the underlying dynamics like a detective would use clues.
I love it. So this new AMM, it's basically Sherlock Holmes analyzing candlestick charts.
Ha, you could say that. And the cool thing is, once you understand those hidden movements,
Yeah.
you can anticipate price movements much more accurately.
So instead of just reacting to the current price,
Right.
it's more about anticipating where the price might go next based on where that hidden target is heading.
Exactly. It's about being proactive, not reactive.
Got it. But how do we actually know this new AMM works? Do they, put it to the test?
Oh, they did. They ran a bunch of simulations pitting their new AMM against a traditional one, the kind designed for those more volatile assets.
Okay, so what happened? Spill the tea. Did the new AMM come out on top?
It did, especially when dealing with those really fast-moving pairs like wstETH, where that whole mean reversion idea just doesn't hold up.
Makes sense.
So this suggests that the new model, it's better equipped to handle the complexities of these pegged assets.
Yeah.
Which could mean better profits for liquidity providers and, a more efficient DeFi ecosystem overall.
This is all incredibly exciting. We're talking about a potential paradigm shift in how we design AMMs for these pegged assets.
It really is.
It's like moving from, I don't know, a horse-drawn carriage to a self-driving car.
Haha, yeah. And it really highlights just how much innovation is happening in the DeFi space.
Absolutely. It's a wild west of experimentation out there. But before we get too carried away, let's dive a little deeper into the specifics of this model and really unpack how it works.
Sounds good to me.
Okay, so let's get down to the nitty-gritty of these multi-level nested Ornstein-Uhlenbeck processes.
Oh, yeah.
I mentioned,
All right, you ready to dive in?
I'm ready. I'm ready. Let's do it.
Remember our boat and buoy analogy from earlier?
Yeah, I like that one.
Okay, good. So let's use that to kind of wrap our heads around these processes.
Okay.
So imagine we're tracking the boat's position constantly, right?
Right.
That's like the price of our pegged asset, what we see in the market, up and down, up and down.
Yeah. The price action on the charts.
Exactly. And that's our first process. We'll call it S.
Okay, so S is what we can see, the surface stuff.
Right. But then we've got the buoy, right?
The mysterious hidden buoy.
Haha, exactly. It's moving around too, remember? Currents, waves, all that.
Right. Always shifting.
And that's our second process, U. It's that hidden target that our price, S, is constantly trying to reach.
Okay, so we've got S, the price doing its thing, and U, the elusive target.
Yeah.
So how do these two, dance together?
Well, S is always trying to catch up to U to close that gap.
Okay.
But U itself is also kind of drifting towards a long-term average, like there's some invisible force pulling it back to the true peg.
So two dancers, each with their own moves, but still connected, influencing each other.
That's a great way to put it. Now, here's the million-dollar question.
Give me with it.
How do we actually figure out what U is doing if we can't see it directly?
Right. We can't just, call up the buoy and ask for its GPS coordinates.
Exactly. So that's where the filtering technique comes in.
Ah, yes, the detective work. We gotta study the boat's movements to get clues about the buoy.
Exactly. By looking closely at how S, the price, is behaving, we can start to figure out what U, the hidden target, is likely doing.
Like putting on a special pair of glasses that lets you see through the fog.
Exactly. And that's basically what this new AMM is doing, right? It's wearing those special glasses.
It's seeing things that other AMMs can't.
Precisely. And that gives it a huge advantage. It can anticipate price moves based on where it thinks that hidden target is going.
So it's not just reacting, it's predicting.
Right. It's like having inside information, but instead of relying on rumors, it's based on, hard data analysis.
Okay, so how about those simulations they ran? Did those back, the whole special glasses thing?
Oh, yeah, definitely. Especially when they tested it with wstETH.
Right, that fast-moving pair.
Yeah, the new AMM just crushed it compared to the traditional one.
Because those traditional AMMs, they just get thrown around trying to keep up with all that zigzagging.
Exactly. But the new AMM, because it understands what U is doing, it can navigate those choppy waters much better.
So it's like the more complex the asset, the more you need a model that can handle all those twists and turns.
Absolutely. We can't just use the same old AMM for everything.
It's like trying to use a hammer to, tighten a screw.
Yeah. We need the right tools for the job.
Okay, so this is all super fascinating, but I got to ask, are there any, limitations to this model? Any assumptions baked in that we should be aware of?
Of course, no model is perfect, right? One key assumption here is that those price dynamics, they actually follow this whole multi-level Ornstein-Uhlenbeck process thing.
Okay, so in the real world, things might not always be so neat and tidy.
Right. There could be other factors at play that the model doesn't account for.
Fair enough.
But even with those limitations, it's still a big step forward,
For sure. What about those tests with the real-world data? You mentioned USDC, USDT, and stablecoins. Did those back up what they saw in the simulations?
They did. For USDC, USDT, both the new AMM and the traditional one did pretty well, actually.
Ah, so for those more stable assets, maybe you don't need all the fancy footwork.
Yeah, maybe not. But for stablecoins, that's where the difference was really clear.
Okay, so that's where the new AMM really shined.
Yeah, which shows how important it is to really understand those complex dynamics.
All right, so basically we need to move away from this one-size-fits-all approach to AMs.
I think so, yeah.
And start designing models that are, tailor-made for different types of assets.
Exactly. We need a whole toolkit with different tools for different jobs.
I love that. It's like building a specialized toolbox for the DeFi world.
Exactly. And this research, it's giving us some of those new tools.
This is fantastic. So where do we go from here? What does all of this mean for the future of DeFi?
Well, that's a great question, and one we'll dig into in the final part of our deep dive.
Okay, so we've gone through all this incredible stuff about pegged assets, those multi-level whatchamacallits, and we've even talked about building a super cool DeFi toolkit. But where do we go from here? What does it all mean for the future?
I think this research, it's kind of a turning point, It's like we've been using this one-size-fits-all AMM, like a Swiss Army knife.
Right.
And now we're finally starting to create specialized tools.
Yeah, tools for specific jobs.
Exactly.
It's like we're moving from a world of generalists to a world of specialists.
That's a great way to put it.
And that's got to lead to some pretty amazing innovations, right? I mean, I'm already thinking, could we apply this to other parts of DeFi?
Absolutely.
Like lending, borrowing, maybe even prediction markets.
You're on the right track. So this model we talked about, it's designed for pegged assets.
Right.
But those core principles, you can totally adapt them to other areas where you see similar, dynamics.
Yeah.
Imagine a lending platform that can predict changes in borrowing demand, or a prediction market that can account for all those hidden variables we talked about.
Okay. So we're not just copying and pasting the model.
Right.
But we're taking those ideas and getting creative with them.
Exactly. It's like learning a new martial art. You don't just copy the moves, you adapt them to your own style,
You can get your own.
Exactly. And that's what this research is doing. It's giving us a new way to look at these problems, a new way to think about how these complex systems work.
It's like we're upgrading our mental software.
Exactly.
So think about the possibilities here. I mean, we could see a whole wave of new DeFi protocols, each one tailored to a specific need.
Right. AMMs that are designed specifically for stablecoins or liquid staking tokens or even prediction markets.
That's a future I can get behind.
It's like a DeFi ecosystem that's bursting with diversity and innovation.
It's like a beautiful, vibrant coral reef with all those different organisms, each playing their part.
And the best part is, this is just the beginning. As we do more research and more bright minds jump in, who knows what we'll discover.
I love it. This deep dive has been a real journey. We started with those head-scratching math concepts, and now we're envisioning this amazing future for DeFi.
Yeah, it's been a blast exploring this with you.
It really has. And it just shows you the power of, open research and collaboration.
For sure.
Now, for our listeners, if you're even a little bit curious about all this, we really encourage you to check out the original research paper. We've got a link in the show notes for you.
And if you enjoyed this deep dive, don't forget to subscribe to the DeFi Research Corner for more explorations into the cutting edge of DeFi.
Until next time, keep on learning, keep exploring, and keep pushing those DeFi boundaries.